and welcome to the series here that we're doing with Gary Norden. It's about mastering the DOM. Today, Gary's going to talk about order flow trading and the DOM. Let me just show you the previous webinar as well. So this was part one that you'll see here if you go to our YouTube channel and you scroll down a bit. And then under Pro Trader Webinar Series here, you'll see that we listed it down here. Really interesting webinar here. Gary has quite a bit of experience and has seen the history of the DOM, and that's what he went over and covered, the origins of the DOM, working in the pits and how the DOM started to evolve and develop. So he's going to go on part two here today with the order flow trading in the DOM. So Gary, you may have known or not, is responsible for, came up with the Norden Method. He's been a professional trader for over 30 years, including several years in the trading pits of the LIFFE pit. As a senior trader at some of the world's largest investment banks, he's a co-owner of the NN² Capital and creator of the Norden Method, a unique style of trading the order flow via the DOM. Gary is author of An End to the Bull and Technical Analysis Exposed, Why Most Technical Analysis Traders Fail. So let me, I'll put these into the chat for you, the NordenMethod.com and GaryNorden.com. So if you want to reach out to Gary, if you're interested in what he has to say here. Some disclosures, and then let's turn it right over to Gary. General disclosure: all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. So Gary, if you want to go ahead and share your screen, and then I will just rebroadcast it here. Okay, everything looks great.
Yeah, cool. Thanks, Bruce. So this is the second, and in conjunction with the improvements and what we've been doing with Bookmap Pro DOM, just really, going to continue to talk about the DOM, why it's such a powerful tool. Going to really break it down. One aspect of the Norden method is it's very precise and very targeted, and we're looking at different parts of Edge and different ideas, but in quite a lot of detail. So we'll move into a different part today. Last time I spoke about the history of the DOM, why it was developed, who developed it. We're going to just expand on that a little bit further today. Again, a disclaimer for me as well. And so I'm sure you can pause out, those of you that are watching after this. So recap, last time we spoke about the DOM was created because the original trading platforms were pretty poor. I explained that, and so trading platform providers started to liaise with the successful locals or ex-floor locals, and we started to create this DOM. The tools that they asked for, what did locals want? Okay, what did order flow locals want? They wanted tools to get them in and out quickly. They wanted tools to help them judge liquidity, see the market information objectively, and see the current information only. And we're going to talk a little bit more about this today in terms of order flow, because this has kind of morphed over the years. And now I think what a lot of people think is order flow is not what we would have considered order flow and not what we should consider order flow. And I'm going to go into that today as well, because I think there's some misunderstanding of that, which means there's misunderstanding of how and why we should use the DOM. So to understand why locals wanted those things, or order flow traders wanted those things, we have to understand what order flow trading is. Nowadays there are many styles of trading that are grouped as order flow, but in reality I wouldn't call them order flow, and I don't think that, I'll explain why, and you'll see why and what they are. It's not to say they're wrong or whatever. They're just not what we would classically call order flow styles. And I get, many people say to me, "Oh, I've studied order flow trading," and when I ask them what they've studied, it's not order flow trading, and it's nothing like what I would see or use. So, pure order flow trading. If you are trading pure order flow, you are in and out quickly, so a few seconds. You are trading in the now, so you are trading based on what's happening right now. You will use current order flow and liquidity in your analysis and execution. You can potentially trade at any price level at any moment. That's very important. At any price level at any moment. You generally try to pick off weak traders with most order flow trading. It's a high frequency style. You should, if you're an order flow trader, be trading dozens of times. And it's not a predictive style. So you should not be sitting here thinking, where are we going to be in half an hour, or, I think we've reached a low or whatever. That's not order flow trading. So if the style you use incorporates any or most or some of these, then you're going towards order flow. But if it doesn't, if you're not trading high frequency, if you're trading once or twice a day, if you're holding trades for 30 minutes or 1 hour or 2 hours, it's not order flow. If you're not basing your decision on what's in the market right now, you're not trading order flow. And as we'll see, this is why the DOM is used. If you think about it, as we get onto this is what the DOM is exactly made for. If I'll just move that away a little bit. Oh, sorry. If we think about an example, so most people out here, right, we know that the Citadel buys Robinhood's order flow, right? So retail traders are putting their orders into Robinhood, and that gets routed through Citadel. Citadel are paying to trade that order flow, right? And we know that Citadel is, we can categorize Citadel in that sense as an order flow trader. Okay, so let's have a think about how Citadel does and see if it ticks these boxes. Are they in and out quickly, a few seconds? Yes. If they trade against a retail trader coming in, they're not going to hold that position for half an hour or an hour. Okay, they're going to be in and out of that in a second or two and just make the couple of cents at whatever it is that they're being given. Is it in the now? Is it based on what's happening now? Yes, 100%. Like every market maker style, it's only based on now. You're not sitting there thinking, where were we half an hour ago? What do I think about the volume from half an hour ago? This order comes in, you will process it and execute it and base it on what liquidity is happening now. So point 3, does it use current order flow and liquidity? 100%. If that order comes in right now, can I fill it right now? Do I just keep it in the order book? But it's based on the current situation. Can they potentially trade at any price? Yes. You don't see Citadel buying Robinhood order flow and then saying, I'm waiting for the market to hit this level and then I'm going to buy, or I'm waiting for it to hit this level where I think there could be a breakout, or no, it's none of that, right? They can trade potentially on any market, on any retail order at any price at any time. And that's very important. It's not predictive. As well, they're not sitting there thinking, I think the stock's going up today or going down today or going up for the next hour or down for the next hour. They're just in and out straight away, no prediction. They're picking off weak traders, 100%, right? They're buying the weakest traders in the market, potentially the Robinhood traders. Is it high frequency? Yes. They're going to trade, thousands of times a day doing this, okay? So it ticks all the boxes. Classic example of an order flow style, ticking all the boxes. They can trade anytime using the current information only, and a high frequency. So that is an example of an order flow trader. And it's one, hopefully, that by putting this example, and most of you have heard of what Citadel are doing here, it sort of puts it into context. And again, to back up what I've just put on the last slide and what we're going to go through now. So what is not order flow trading? And this, as I said before, this is for some of you who may have learned what you consider to be order flow methods. I would not consider them to be order flow. So holding trades for minutes or hours, using levels that are based on past behavior, past volume, that kind of stuff. We'll get to that in a second. It's not pure order flow trading. If you use price charts, standard price charts at any time, you're not order flow trading. They just don't come into the equation at all. And we'll look at that more in the next webinar that I'll be presenting in maybe 2 weeks time or so. I've already started writing that one. If there's no analysis of liquidity at the time of the trade, then it can't be order flow trading. And no analysis of exit liquidity, which there can't be. If you're holding a trade for half an hour or longer, okay, you cannot be judging the exit liquidity because you don't know what it will be. And as an example with the Norden method, which is an order flow style, one aspect of it is we are measuring exit liquidity before we enter a trade. It has to be as part of an order flow. If you're trading pure order flow, I need to know, can I get out of this trade in the way I want to get out, in the time I want to get out, which is usually a second or two. So a lot of methods out there would not have these in them. And essentially there are, many styles will analyze previous order flow or really previous volume, okay? But they are not what we would typically call order flow trading, not pure order flow trading. And like I say, if they're held for several minutes or longer, they have no knowledge of liquidity and order flow at the exit. Therefore, it can't be. The whole term order flow is you're trading in the flow of orders. If you're not judging that flow of orders at the time of the trade, okay, at the time I'm doing this trade, I'm judging, can I get in and out of the order flow? That's what order flow trading is. But it seems to have morphed over the years. I spoke about this at the last webinar, right? That a bunch of tools and things were added predominantly by some retail traders and that I can understand, but it kind of morphed and it started to cloud what order flow trading is. Now, 15 years further on, it's some of these ideas have become accepted, sort of ideas that they are part of order flow because so many people have said that and used it. But for those of us that are classically trained order flow, they're not. Okay, and again, go back to what Citadel are doing and mark off what you're doing in line with that, because the pros are still trading the classical order flow styles, right? The pros are still doing that, whether they're a hedge fund or whether they're, trading in futures for themselves. So while there is some analysis in these methods of past order flow or volume, yeah, there is some analysis of what happened in the past. Here was an area where there were lots of buyers or where there was lots of volume. These styles are also, they're more predictive. Why? Because you're holding a trade for longer. If you're holding a trade for half an hour or 20 minutes or 10 minutes, you are more predictive. You are saying, I think we're going higher. Pure order flow just means I can get in and out within the next second or two. I don't care where the market's going. It is not predictive style about it. So again, they don't constitute being pure order flow. Pure order flow is not predictive, as generally market making styles, which order flow is, market making styles are not predictive. We want to get away from prediction. That's the whole point. And that's why professionals are attracted to these methods, because trying to be a predictive trader for 20, 30 years is, effing hard thing to do, right? It's nigh on impossible for 99% of people. So try and find methods where you're not having to predict what's going to happen. So I would classify most of these as a form of TA, right? Form of technical analysis. Some form of volume analysis, where some people classify, market profile or volume profile styles of trading as an order flow. I wouldn't. I would classify them as technical analysis. Okay, and that discussion is a different discussion as well if you want to trade in that style. So again, I hear from many traders who say they already trade order flow, and usually I would say about 8 times out of 10 at least, when I hear about it and I hear what they're doing, I would say that's not order flow trading. Okay, it's just a different style, but it's been grouped over the years at that. And as I said, it's one of those things. I'm not here to say whether it's right or wrong. I'm just saying it's different. So bring this back to the DOM, which is what we're talking about. If we think about what order flow trading is, the DOM is the perfect tool for it. It's what it was designed for. The people that designed the DOM were the people that were doing this. So it's not surprising. So let's look at why the DOM is perfect for order flow. In and out quickly in a few seconds or less. Yeah, one of the things we introduced was one-click trading, right? That's perfect. Ticks that box. I can get in and out quickly. It's in the now. It's based on what's happening now. That's a beautiful thing, and I'm going to go into this in more depth in the next webinar. But one of the great benefits of the DOM is it's only showing you what's happening right now. And if you can trade in the now, it's massively powerful, and most traders can't. And the vast majority of trading styles out there are not trading the now realistically, even though they say, oh, I've got a setup now, right? And it's broken this level or this line. That level or that line is often based on a lot of information from the past. It's actually not based on now, and it's often not based on liquidity of what's happening now. Okay, so the DOM doesn't show you the history. And for example, with the Norden method, I really, tell my students, I do not want them having a price chart on there. I don't want you thinking about what's happened in the past. I just want you to focus on the now, liquidity and order book and price action, the now. So the DOM is just that. That's a massive reason why it's so powerful. Again, I'll go into that in more depth in the next webinar. The DOM just shows us current order flow, current liquidity. It's fantastic. It shows us this is what we wanted, this is why we have it. With the DOM, we can potentially trade at any price level, particularly as it is now. I went through the history of the DOM last time, and I explained to you that that wasn't possible with the very first trading platforms. Even the very best one, back in 2000, 99, 2000, even the very best one didn't have all the price levels that we have now. We just had like the five or 10 top prices. They could have been anything. So that was changed. It was amended. It was amended at the request of locals and order flow traders. So now we can trade anywhere, any price we want to. Does it allow us to pick off weak traders? It does, if you're skilled and you understand how and what they look like and why they do it and those sorts of things. So it enables us to do that. And again, enables us to trade in a non-predictive style. You can't see trends on a DOM, right? Which is great. You're not trying to think, oh, I think we're going up or down. It's just, if you look at a DOM on a fast market this morning, it's just up and down, hazy, crazy, helter skelter. Very hard to pull much out. Some people struggle with that, and because they love seeing, trends and things easy. But actually, if you can understand that randomness and you appreciate that there is randomness, which is another key aspect of trading the DOM, which a lot of traders out there struggle with that concept of randomness, right? They think there's a pattern behind everything. And, if you believe that, you will always struggle, okay? You're always going to tend towards technical analysis. You'll always struggle. I saw something on my Twitter feed today, albeit on the For You part of Twitter, which is generally a cesspit, but this is someone who's actually well respected in the field that they work in, which is technical analysis, saying that the last 4 closing prices of the NASDAQ all ended in 8. And then of course you get all the comments about, yeah, that it can't be a coincidence. Yes, it can. That is still randomness. If you don't understand that we could have 4 days in a row where the NASDAQ or any index ends in the same number, that's just as random as it finishing, in an 8, a 7, a 3, and a 2. All right. This is, and again, read Fooled by Randomness. Whatever you think of Taleb, that is a brilliant book, and it explains a lot about this markets. But things like that, if you tend towards patterns, if you're always looking and trying to group something in a pattern or a trend or something, you're going to struggle over time at many times in these markets. So the DOM is just showing you this randomness, and you have to accept there is randomness. Why is there randomness? Because of market orders. Right, there's going to be a ton of market orders on the open this morning, right? And in that first hour or two, there's going to be a ton of them, particularly if you're trading NQ. Understand that. It will create price levels, it will create all sorts of things, but a lot of that's going to be created by randomness. Pure order flow trading, and certainly with like the Norden method, we embrace that randomness and accept it, embrace it, and just move on with it. So not predictive style. So the DOM is the perfect product, the perfect platform style to use it, and plus with time and sales. Okay, so obviously we want, it's the other essential tool. What is trading? You won't get to see every price on the DOM. Sometimes you won't. You want to see what volumes are, and so time and sales as well. It can help you judge the pace of the market as well. It's something we watch. Again, I've said to a lot of people before that order flow traders, my style or other order flow traders, as much as anything, we judge liquidity. That's one of the key aspects. If you struggle to judge liquidity, pace of market, you're going to struggle to trade order flow. It's a really key thing. So time and sales plus DOM, these tools are essential, and if they are good, then this is what we use to trade order flow. So what we don't use to trade this order flow style, past volume analysis. I know that's become almost a default part of many DOMs, is to have some sort of volume accumulation or past data. That's because there's so many forms of what other people term order flow trading that use that information. For my students, I tell them to take those columns off. Okay, I just don't want people to be looking at what's happened in the past. Price charts definitely are not part of order flow trading. They shouldn't come near anybody teaching an order flow style. So a number of these standard tools were added at the request of trading. Of course, if you're running a business, you're going to add these things. And there are some tools that some order flow traders use that I don't, and there are some tools that I would want that some order flow traders won't. But there are some that we're all going to probably agree on that are essential, and some that I think we'd all agree on that are not essential. So a lot of things my students will remove because I really want people to be in the now, because that's what pure order flow trading is. Okay. If you think about it, and just go back to a Citadel example, you have to understand, like, during a day things can change, right? Context can change. So the fact that there was a bunch of trades went through at a price earlier, through Robinhood clients earlier in the day, if the situation's changed, you should be basing your decision on what's happening now. The fact that they, at this time last time, they all were buying here, or there was some big volume, it could be meaningless right now. Context may have changed, and we see that a lot in these markets, particularly as they become volatile. Remember too that in terms of areas where there are like high volume areas, which is what a lot of people are looking at when they think they're order flow trading, remember, a lot of that can be down to just the level of volatility in the market. In a low volatility market, by definition, if the ES is trading 1 million contracts a day and it's low volatility, those million contracts are going to be spread out over fewer price levels. So there's going to be some areas of there that are going to be quite heavy. If the volatility is a lot higher today, that million contracts, it might be a little bit more than 1 million contracts, but let's say it's another million point whatever, they're going to be spread out over a much wider area. So there's going to be lower levels of volume, even on the biggest level. So some of that analysis is really about, is it a volatile day or not? Okay, and of course, there's always going to be a price level every day that has the highest volume. That's going to happen anyway, anywhere. Does it mean that was by choice? Perhaps not always. Again, if you want to look for patterns, you'll find it. Otherwise, my suggestion usually is embrace the randomness of what's happening. So if we go back to the tools that we've just added to the Bookmap DOM Pro, okay, again, it will highlight what these tools are, and these are great. I think they're great tools. For some of you who are not order flow traders or trading a different type of order flow, maybe thinking, well, why have these been added? So let's go back to this whole what I've been saying the last 20 minutes or so. So what has just been added to Bookmap DOM Pro? Move orders easier. Okay, one click move. Okay, well, that helps us get in and out more quickly, which was one of the points I made at the start of this. Can we get in and out quickly? That helps us. That's something that is helpful for order flow traders. Can we see the current trade more easily? Well, that's something that's been changed with the new coloring that you can do on the last trade. And also, if you have a position there or you're hovering there, it's also clearer now as well. So we can see where the market's trading now more easily. Again, it's a small adjustment, but every one of these small things is important. It's something I teach my students all the time. Little things are just so important. And in fact, becoming a good trader is all about making very small adjustments. It's not about a one, eureka aha moment. It's usually small things that you just keep working on, small things to improve. There's now a line when you recenter on the new DOM. We've built in, or Bookmap, I shouldn't say we, but I was just, I was a part of the consultation process. But they now, when you recenter the DOM, there's a line that tells you where you came from. Again, that helps you to judge the pace of the market. How far is it moving? Okay, it sounds like a small thing. It's for my style, it's actually quite a cool thing and quite important. They've also, Bookmap, sorry, have also introduced trading on a down click, something that we asked for. So when you click your mouse, before on the DOM Pro, if you clicked your mouse, it was the up click, the order went in. Again, that sounds tiny, right? You click on the down click. Little things matter when you're trading in a precise way, targeted way, like my style and other order flow methods. These things are really important. Again, something we asked for. Really happy that the guys at Bookmap worked on this and did this. Again, helps us to trade more quickly. And another thing they've added, obviously, Q position as well. It just helps us to know where we are in the pace of things and the liquidity. So all of these things have just been added, all exactly fit to order flow trading, to the style of things, to the type, to tools that are going to help us to trade. They're going to help us to get in and out more quickly and see what's happening in the market more easily. That's why these things are all driven by order flow trading. So they are consistent with what locals wanted when they first designed the DOM. They're consistent with real order flow trading, and they're consistent with being in the now, the current liquidity, the current market action. That's all they're interested in. None of the things that certainly that I was suggesting to Bruce and the guys at Bookmap are related to, what happened in the past, or can we see what's happening in the past. They're all related to the right now. And I think they're really cool tools, and I'm thankful and grateful to Bookmap for doing that. So just to I suppose summarize, first it's important to understand the difference between order flow trading and styles which use past volume in their analysis but are not technically order flow. Okay. And yeah, that has been sort of muddied a bit over the years, and I can understand why. I can understand everything just gets grouped together, but I don't think there should be. So this will then clarify what tools and what information we really need if we want to be an order flow trader, and you'll see a clear difference between the two, what they need to work. Again, if we go back to the checklist earlier, if I go back to these things that we added, if you think if your style is an order flow style, ask yourself, do these things that have just been added, do they help your style? And if they don't, if you think, I can't see how that's going to help me trade or help me find a trade, or then it just shows you again that what you're doing is not technically pure order flow. The DOM will always be the tool we use. I really can't see for pure order flow traders, like scalper style. I can't see a time where we're not using that. It's just such a brilliant tool for it, and in particular because it just shows us what's happening now. I said I'll expand upon that topic in the next webinar. It's extremely powerful in the hands of a skilled order flow trader. If you see someone who's skilled working around the DOM, it's a very powerful tool. It's phenomenal to see it, and it is a skill, by the way, as well. It becomes a skill in the right hands. And like I say, real order flow traders only trade really from a DOM. So that's the summary of what I've suggested tonight. As I say, I've got more topics hopefully lined up. If I get invited back, I'm not sure. I might have offended too many people, Bruce, but hopefully people have enjoyed that. If you have questions, I'm always happy to answer questions as well.
Yeah, no, sure. Gary, let me see here. I have some questions right off the bat. All right. And we got a little bit of discussion going in here in the chat in YouTube here.
I would have thought I would have got a few comments after this one. Someone told me I should have left this one till last, by the way. Someone said, leave that topic till last, Gary, you'll never get invited back.
No, I mean, it's really great. It's really great to hear and to put that classical definition on order flow and what it is, and this and how it relates to your previous webinar and the history of the DOM and how it developed and how it became what it is really important. And you made a comment there that it is precisely order flow because that's what the DOM is. Like it was developed for these traders, so it can't be anything but.
100%. Yeah.
So I'm curious. We spoke about this last time about the liquidity being the number one thing, more or less. I mean, like you said, it is so vitally important that the here and the now is talking about the order book and the liquidity. There's a question here about Bookmap, and Hello was asking about. Well, then Bookmap is showing, technical analysis. It's showing, the past, and that is true. I am curious how if you see some sort of relationships, and please don't roll your eyes. I can just see, like, yeah, I just covered that, Bruce. I'm wondering though, like, if you could see some sort of relationships in the historical liquidity that are very similar to what you're looking at in the dome. It's more about the kind of bigger here and now.
So, so firstly, I'm only talking about order flow trading. So, as you explained to me, the history of Bookmap really, and for example, the heat map is for a different style of trading. So, if you're trading in a different style, then you would need different information, and the heat map, which is a really cool tool as well. You would be using different information. I'm really just talking about pure order flow trading. So I'm not saying that there are no other styles. Of course, there's lots of other styles of trading. I'm just saying what constitutes pure order flow trading as it was and as it still is for the professionals. So really, I am just interested in right now. Can I get in? Can I get out? That's what I'm interested in. It doesn't. If knowing that I could have got in and out of this an hour ago is interesting, but it may not be important. It's like, can I get in and out? If you think about it, if can I get in and out of this stock in a certain way today, it's going to be very different to how you would have got in and out of it yesterday, for example, right? Yesterday, rallying day in the market. If you were trying to sell, for example, yesterday, right? Knowing all of what happened yesterday is pretty much irrelevant for you if you're day trading today. If you found it easy to sell yesterday and you could have looked at all volume levels, it was irrelevant. If you wanted to sell yesterday in a rallying market, it's quite easy. Today, if you want to sell, you're going to have to trade a bit differently. And yesterday's order flow, yesterday's levels, or whatever it is, to me, is completely irrelevant. And it's that is the way I view even, for a bit longer trading. But that's always what I say to people. If you try to hang on to past data, you can end up making some mistakes. So, but coming back to a pure order flow trading, really, it's about being in there now. And that if you, it's I can't explain enough about how trading in the now is so powerful to free up. As I say, there are other methods that do require you to analyze past information, but generally they're more what I would call position style, predictive styles of trading.
Mm-hmm.
That's a different area. That's a different area. Okay, and it's an area that, for example, if I'm day trading, I don't want to go there, and that's my view. I don't want to go down the predictive position trading on a day trading perspective. I would much rather just get in and out quickly and do that as many times as I can.
Yeah, yeah.
So
So I guess the question is, like, even that we have the heat map and the recording of the actions with the liquidity heat map. However, it does also show the here and the now on a higher time frame. But still, like, so many things can happen between the moment and it could be several hours before that liquidity even trades, if it ever trades.
mhm.
Yeah, I guess it would be, your answer is that you're looking for the here and the now for something that is very sure, and this style of trading is very different, even though you have the liquidity on a much higher time frame that may fit the concept that you're looking for, but the style is very, very different, that because you're looking for, like, here's an opportunity, and I am pretty sure that this will work, this will happen.
Yeah, I think with any market making pure order flow style, you generally will be looking for a much higher win rate. You should happen, right? I don't think Citadel is sitting there thinking, oh, if we can make money on 50% of our trades against Robin Hood traders, well, or 52%, we're making money. I'm pretty sure, Citadel, I reckon they can make money on a higher percentage of the trades on those trades where they're trading against Robin Hood clients, and they should be in that style, in that order flow market making style. And I think, one point I probably did emphasize, and again, I'm not here to, I suppose it's not really trying to persuade people to trade in these ways. With this series, I'm trying to explain the evolution of the DOM and why it's powerful and for what styles. And that's the theme. And I'm going to go along different areas of this over the next, few webinars. But one area that I probably didn't focus on enough in this particular one, was frequency. That's really important. I mentioned that if you're not a high frequency, if you're only trading once or twice a day, that really isn't order flow trading. Order flow trading is, generally a much higher frequency, and generally professional traders will move towards a trading style with higher frequency. Um, Whereas, we'd rather have higher frequency. Ask yourself, why does firms like Robinhood and all those big hedge funds just want to trade against, Mickey Mouse? What's the average Robinhood account has like $250, right? Why would they want to trade against all these tiny little guys? They're just tiny little trades. Yeah, but you would do it if there's thousands of them every day. That's a very professional style of thought process. So we tend to move towards something that we can trade dozens and dozens or thousands of times if you're a fund. But I say I'm not here to persuade people to trade in this style. I'm just explaining why the DOM was created this way and why the DOM is so powerful for this style. Because hopefully, from what I've explained today, is you can see why these things that we've added and why the DOM created this, why it's just brilliant for order flow trading, real order flow trading. And it's a fantastic tool. If you're not trading order flow, you can still use it for sure. Of course you can. I'm not saying it's only applicable. I'm saying it is essential for order flow trading, and it is a brilliant tool in the hands of a skilled order flow trader. It's fantastic. But if you're trading other styles, you have the heat map, for example. Or whatever else it's designed around.
Right.
Does that make sense?
Yeah, yeah. I mean, a big distinction. Even I was trying to answer the question and wondering if the concepts of what you're looking for can be applied to a higher time frame liquidity. That is in the here and now. It's just very far away, but it is very high time frame
Mm.
or liquidity. And the quick answer is obviously a big no. Uh, the uh, Yeah, it makes sense though. I mean, you're basically trying to. It sounds like with the here and the now, you see an opportunity to facilitate a trade to be able to get in at a specific price based on the liquidity, and then to get out at a very specific price, not far away, just due to some sort of imbalance in there.
Yeah, yeah. That's a key part of it is to know that you can get out as well. Um, every time you're trading short term, like I said with Citadel, you'll fill an order because you can get out. I've said this before, and I don't know, maybe on here or in some of my own recordings or YouTubes that um, some people think market making they have. I think we did about this before, right? Misunderstanding of market making. Some people think market making is about front running, and it's not. And you become a skilled market maker when you can fill orders. Do I know whether I can fill an order here? You know, trade against it. And Citadel are sitting there going, they're not sitting there trying to jump in front of little retail orders. Why would you want to do that? You would want to fill retail orders because they're pretty poor. Um, so it's about, but you need to know that I can fill this order, and I'm reasonably certain, that I can get out of that trade well. And realistically, if I fill someone now, I really only know with a very high degree of certainty that I can get out of that trade well in the next sort of second or two, right? I've got no idea whether in 10 minutes time I'll be able to get out of that trade because I've got no idea where the market will be in 10 minutes time. And one of the assumptions that I think is a good assumption, and assumptions are usually dangerous in this industry, but one of the assumptions I have as an order flow trader is I haven't got a clue where this market will be in 10 minutes time or 5 minutes time. Just assume I haven't got a clue. And I think there's probably too many traders who think they can predict where it's going to be in five, and that's the game that they want to play. The game this industry often tells them it's about prediction. It's not. Not to the professionals. It's just, can I get in and out of this thing quickly? And then it's a case of, do you have the skill set to understand the liquidity, understand the conditions where you'll do that well, understand how to protect yourself, understand what are weak orders, where are they? But once you have that skill set, it's not a predictive game. And order flow trading shouldn't be. You should just be in and out of the flow of orders.
Yeah, 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 makes sense. And just there were a lot of kind of various questions in here. about the Bookmap DOM and the updates, etc. I can show you about that in just a minute, but I also want to show you here during the can answer a lot of the questions from previous webinars with Gary under this Pro Trader webinar series on our YouTube channel. Let's just click on that, and I'll show you in here. So if you scroll back down, you'll see here, this is Gary mastering the DOM, the origins of the DOM that I showed you earlier. And then here's a Pro Trader webinar with Gary as well. This was back like 3 months ago or so. And this one might be a good one, if probably answer a lot of questions people are having. So you might want to watch, rewatch that one or access that one. And then regarding the Bookmap marketplace, or the questions about the hold on a minute here, and this isn't it, this is it, okay, about the DOM and Execution Pro. So it comes with the Bookmap Global Plus version, which makes good sense that you'll get that. And let me show you that as well. So if you go to the pricing section here, you'll see it here, like under Global and Global Plus. You'll see, if we scroll down here, the DOM Pro and Execution Pro is only with the Global Plus version here. All right, so you will need that because this is the one that offers the one-click trading. So you get the DOM with it. Yeah, we've kind of separated now between the DOM Pro and Execution Pro. You will get both, but the DOM is standalone and works just great within Bookmap. So give it a try, and see if you like it. A lot of new changes have been made. Let me show you where you can find out information on that. Go to our knowledge base. That's under the More button here, and then go to the knowledge base, and scroll down, or here you'll see DOM Pro here, okay, in the add-ons section of the knowledge base. So go to DOM Pro, and then you can see in here there's a video as well, and other changes that have taken place in here. And updates, etc. So position in queue is one of them. This one click canceling the other order is another one. These are all it's all feedback and suggestions that we've gotten from Gary and other his students and other like-minded DOM traders. So we made these changes for you guys, and hopefully it's helpful for you. So I hope that answers some of the questions in here. There's, like I said, it's kind of a variety of different questions. So Gary, like, I don't know, can you maybe give us an example, like perhaps of, we don't have any visuals here, but and I'm not trying to get to your secret sauce, but something to just kind of lean on to understand what it is you're kind of looking for in the concept here, between in the order book, the here and the now, to be able to say, okay, I see there's an opportunity here to get in and also to get out.
Yep. It will depend on which market you're in, right? How thick or thin the market is. Your judgment is different in the NQ than it would be in ES even, and it would be in ZB, and for sure it would be in tens, right? And for my style and my students, we avoid tens. Okay, it's just not a contract we'll go into. Realistically, we start by thinking, as you should always start, where is my edge? Who are the people I want to trade against? I've mentioned here, you want to pick off weak orders. When you're an order flow trader in a bank or on the floor, like I was at both, or if you're even a hedge fund now, you've got to separate orders that you feel that you can make money from and orders that you're just going to basically just get out of for scratch or whatever, and you don't often have a choice when you're market making or order flow trading in the pits. Or for a bank or for a hedge fund, you've got to take everything that comes through. So for example, Citadel have to trade everything, right? It comes through from Robinhood. They can't pick and choose, but they will have to know which of those orders are weaker than others, which of those orders can they trade. So a lot of what I try to do is to teach people how you can try to recognize weak orders, and a lot of it comes down to, well, who's placing them. So a lot of trading styles are based on trying to work out where the big guys are and join with them. That's just not what I'm trying to do. I'm trying to recognize there are a bunch of weaker traders in this market. Okay, and let's be quite frank, they're retail traders. Okay, that's just frank. And the first thing is that most people essentially they ignore those trades. So whilst that most people are out there analyzing all the big volume and the big volume areas, I'm doing the opposite, right? I just want to know how are they trading, what are their weaknesses, when are they likely to make those weaknesses, and that's essentially gonna from there I can build a structure, I can build some ideas. In terms of liquidity, if I'm trading like ones and twos in NQ or twos and threes in ES, I know I can get in and out generally, but not always. But there still will be some judgment calls I need to make on that liquidity and pace. And there's still some things I need to understand about liquidity and pace to make sure that I'm not getting it wrong. And then the other layers that we build on that would include how do I protect myself? You know, and you do need to understand situations that are not good for us, that where we can ourselves be picked off, because we are also small traders. So there's that balance between I need to pick someone else off and I must make sure that I can't be picked off as much as possible. It's going to happen, of course. In this market, you're always going to have times where shit, I was on the wrong side of that one, I need to get myself out. But generally trading should start with who do I have edge over, why do I have edge over them, and then break it down. I've said in this webinar, lots of small little things, lots of small things that we just work on, and it's to do with that, can I get in, can I get out, do I think I can pick someone off here? There are certain conditions that are good, certain that are not. And I've seen a comment there. I just want to get to this because this is something I get asked a lot, and there's a misunderstanding, okay, about what this style is. So there's a question about how do I protect one tick, okay? There's a feeling that this style of trading is all about making one tick. That's not it, okay? What you make what the market will give you, which will be different today than it was yesterday, and different yesterday than it was the day before, and different the day before than it was a week ago. And that's really it. So is it one tick? Sometimes it will be one tick if it's very slow moving on a slow moving day. But if it's very slow moving, then you're also not going to be losing 10 ticks if it's slow moving by definition. If if it's a slow day, if it's a fast day and the market's moving a lot, you will get more, so if I'm thinking I'm holding a trade for 2 seconds, if the market's moving 12 ticks in 2 seconds, then that's got to be my profit target, right? That's so yeah, people think, oh, it's always one tick trading. No, it's not. It's what the market can give you. And that's another thing that I'm always coaching my students about, because people are trying to hold for this, or they set targets. I'm like, you don't have targets. I don't have targets. Some students do. It's like, what can I get? What does the market give me? Because you know what? That's something that's out of my control. And again, when people set targets, and I get that, and there's a lot of styles that say that you can set targets, you're almost saying that I have some sort of influence. I don't think I've got any influence over where this market's going, even in the next 2 seconds. So what does it give me? I'll take it. That's it. Again, I just embrace the randomness and embrace a whole bunch of things that are out of my control. And I think trading becomes far easier when people do that, and you stop thinking about, oh, they look at that, they stopped the market 2 ticks from my this, or they got me out, or there's no they, right? There is no they, and that's the classic thing. I accept everything. It's just randomness, and I accept that most things are out of my control, and I don't blame anybody when I get it wrong. It's 100% me. Sorry, I think I went on too long on that.
Yeah, no, that was great. That was fantastic.
Just stop me, Bruce. Just cut in and say, Gary, shut up. You've said enough.
No, I have another question.
Right.
I'm reading through all the questions here, and I trying to pick off some of the questions in here and cover them. A lot about the new features, etc. But I'm also wondering about, you mentioned it here about sometimes you get it wrong, and how this maybe the style of trading, or just the participants have changed over the years, and you have some very fast moving markets with these algorithms and high frequency trading, and how do you know if you are getting involved in some sort of toxic order flow? How can you stay away from that?
Yeah, that's a great question, and it's something I do get asked a lot. And happy to say I actually did both in my Substack newsletter, which is free by the way, and my YouTube channel. I've recently done an article about HFT trading. It's quite in depth as well. Um, Suffice to say this, HFTs are not really much of an issue for us. You know, and one of the big reasons is that the timeline they trade on, as it was, someone said to me, a very good market trader, a very good trader said to me, you know, before we can even blink, they're in and out, right? They're trading in microseconds. And they're, more often than not, they're trading against each other because they're the only participants trading in microseconds. So most of the time, and realistically, there's not really a business model for microsecond traders to trade against retail small 2 lots and 3 lots. There's not much of an opportunity for that in microseconds. So a lot of the time they trade against each other. Um, but go back to it in the early days. So the Norden method is, my method has evolved over time. Like in the early days, you could trade against some of the bigger traders more. But I started to realize that and this is, we talk about, go back to the last webinar about the transition from the floor. What was the biggest, once we sorted the DOM out and once we got the DOM as we wanted it, there's one piece of information that even today's DOMs doesn't have, one massively critical piece of information that we're never getting back, right? Which is, who was it that traded? That's what we had on the floor. That's what we had on APT, which I explained, right? You knew who traded it. That gave you some ideas about what was going on. There are some people you would happily jump in front of and some people you would happily fade. But we didn't know that anymore. So what started to, as I started to evolve was I have to change what I'm doing. But coinciding with it was because I couldn't know what the big guys, who they were, what they were doing. There are some big guys, like I say, you're happy to fade them, right? Because they're forced buyers. For example, option traders. If a big option trade goes through and they are forced into buying ES right now, you would often fade that type of trade, right? Because they're just trading because of an option trade. But now we don't know if that was an option buyer buying 800 or 1000 ES or whether that was a real buyer. So we don't know that anymore. And understand, again, I understand what I do know, and I understand what I don't know. So I don't know what these players, who these players are, or what they're doing. So I had to, again, evolve, use the same style of trading, but evolve and go, who do I know are in this market? And of course, the retail traders. I've got a fair idea how most of them trade. I have a fair idea that most of them are not very good. And I have a fair idea that they're not going to be very good tomorrow and a year later and 5 years later. And fortunately, as we go into the early 2000s, there's more and more and more of them. Because one thing this industry's done really well is to bring more and more new retail traders in, generally trading in the same types of styles. And so there's more of them. So I just realized that I can just develop a style that really is saying, can I just pick off when these guys make mistakes? Just understand them a bit more and recognize that they're weak. If I had the resources, I would do what Citadel are doing as well and buy Robinhood order flow. That's what you want to do. That's exactly what you want to do. Find out who the weak traders is and trade against them. Right? You can't really get much more of a model. Whereas the model I grew up with and I had to skill myself in when I was in the bank and the pits was trading against the big guys. Right? As a local options market maker in the pit in London, we had to trade against Salomon and Goldman and JP Morgan, and we had to fill their 2,000, 3,000 orders. That's what we had to do. So I was skilled in learning how to fill big orders, same in investment banks. But luckily, the skills stayed the same, but now I had to just evolve them. So yeah, the bigger traders, I just have to look at how this market did evolve. Yeah, for sure. I'm not worried about the HFTs. I really don't worry about them. But the big guys, I don't know who they are anymore, what they're doing. So I can't use a style that picks them or tries to incorporate that into my method too much. They show me some information, but it's not like it used to be. And I think that's quite important. Certainly is for me. Does that make sense?
Yeah, absolutely. And Gary, I'm wondering if you can maybe point us to that video that you had just mentioned. I've got your YouTube channel up here, and I can put this into the chat for people if they want to further
Yeah. So if you click on
explore.
videos, it should list them in the more recent order.
Mm-hmm.
So the third one along on the top row, why HFTs are not always your enemy. And there's a link in there as well to a Substack. Look at that. I get all the junk guys advertising. That's just killer, isn't it, really? Look at that. Um, yeah. So yeah, there's a link in there to the Substack that explains it in more depth as well. But as I talk about what is the game they're playing, again, a misunderstanding I think out there of what they are, how they've evolved, and I did that in conjunction with another trader out there as well. Um, so that was written in conjunction with someone else. And it was a topic that we both get asked about a lot. So I just said to him, let's do a Substack first, an article, and then I did the video as well.
Okay. Okay. Excellent. So I'll put this into the chat. And let's see, we've got to wrap it up here. So I don't know if there's any more last questions or maybe any more last thoughts that you have.
No, just tell everybody just to be careful out there at the moment. It's obviously very difficult conditions. Things are changing, by the hour. So just wish everybody well. And I'll just share just I say to my students, right, that to you before, Bruce, but I'll say this with people: your career as a trader, if you want to last in this industry, will be defined by your ability to stay out. And everybody thinks this is all about trading a lot and the opportunities. If the conditions are too hard for you, too tough, it doesn't suit what you're doing, stay out. And I can't say that enough. What we really want as traders, something again I say to my students all the time: you want good days and days that you don't trade. So recognize as quickly as possible if the conditions are too tough, or you think the market is too hard, it's not an opportunity, it's going to hurt you. So just stay out. And I think that's something that a lot of traders, you have to know when is your time and when it's not. And when it's not, just stay out. So just be careful to people out there, really.
Okay, excellent. Well, thank you very much, Gary. We'll do it again in a couple of weeks, and we'll take it from there.
My pleasure. Thanks for inviting me on, Bruce.
All right. Bye-bye, everybody.